Good morning, good morning, good morning. Good morning, everybody. Good morning, Adam. Good morning, Becca, Matthew. Good morning, Safe. Good morning, YouTube. Good morning. I never share your never share your edge. We're sharing it right now. Uh all right, we're testing harmony zone number 2. Right now the market is running up. Was running up overnight, and now we're getting a retest of harmony zone number 2. If we're taking a look at the opening range, we got two opening ranges, and we have a 36 to 76 range, and we have two mid 22 and 06, meaning that the market is trading right now under it, and as long as we trade under it, we're coming back to retest it. So that zone needs to be protected. I mean, if you're short, that is. Now the market is out of sync. It will get in sync if we break 654. They're reacting fairly well to harmony zone number 2 so far. It's interesting, a captain set up long here. And they're failing it. Yeah, no, I understand. I mean, I understand the question. Don't share your edge with the firm. But it's not like they're going to duplicate it in any form or fashion. No, they don't. You could average into a position. They removed that long time ago. All right, so we're getting a reversal here. Market is in sync on the short side. Rallies are shortable on a swing trade basis. Okay, so the market is out of sync, coming to retest harmony zone number 1. We're patiently waiting here. All right. I mean, they're coming back up there to retest. All right, so the market is in sync on the short side, and we are looking for Russ to short into this market. So if you're looking at the bigger picture, this is what you got going on here. So the market broke the opening range, came back and retested multiple times, and in a rounding behavior, they're pushing lower. So as long as we continue to trade under that 680, we may get a push toward that low and then break. And you're seeing it right now happening very quickly. Good morning, Adam. Good morning. Jesus, look at that. Boom. Let's go. That's okay. Market is out of sync. Motherfucker. Give me 1 second. All right, continuation trade toward our target of 579. Target is hit. Next target is 554. It's very nice selling pressure. We got a Globex at 529.5. Target is hit. Globex is 529. That's kind of where we're heading to here. And we see the market is trying to, took out stops. They're trying to base here. They're trying to protect the price structure. PCE, core PCE delayed. It's October data. Top of the hour we have top of the hour core PCE price index, personal income, personal spending, which is at 9 a.m. top of the hour. All right, like right here, they're testing harmony zone number 2, but it's fairly strong. I mean, surprisingly, they're still holding that structure. So a trade under 600 will trigger the selling pressure. Okay. Okay. Testing harmony zone number 2. Right here is not necessarily a bad spot as long as we continue to, well, we have to make a higher low. All right. My stop is right under 53, and I'm looking for a break back up. Ah, too bad. Added one to it. Let's see if we can get to 73. Here we go. Well, it's a little bit on the volatile side. We have news, so that probably would not be the best of times. Let's see here. I have my stop. So okay, I took one contract off for a couple $100, and that's gonna help me reduce my exposure to about 7 points, meaning $140 for that trade. And I'm looking for a push toward that 613. We have new. I have to go break even at this point. Be honest with you, because we have news coming up, and if it gets wild, then I'm gonna get smoked. So let me just go ahead and take that stop right here. If they come back with it, and if they don't and give me a bigger target, then that's what it's meant to be. Yeah. I think I'm gonna get stopped out here. There's a little bit of delay in quotes. Yeah, I'm out. Yeah, I know. Okay, so so we made a couple of $100 on that trade. Yeah, good morning, Wayne. Market is in sync on the short side, or out of sync, excuse me. Okay, no problem. It shouldn't be bad, but that's fine. All right, I'm gonna send you a private message, Wayne. Yeah. Okay. I'll look into it, but to browsers. I mean, you're not using it through a browser anyway. You're just downloading the files, right? And you're not unpacking them. Um, let me send you. Okay, that's fine. Yeah. All right, so the market is in sync on the short side. We're looking for rallies to short into this market. Our target is Globex at 529. Here we go. We're getting to our target, 529.5. A lot of chopping is going on here. The captain set up long on the 50 NT Renko, so the market is coiling here. A little bit of a base, but I'd rather be short than long on rallies. Man, that's a whole lot of coiling going on here. I think this is an area where we need to be a little bit more patient, to be honest with you guys. Hey, Safe, how are you, buddy? Liquidity tech, yeah. No, I'm with you on that one. I just what we're experiencing here is a reversion to the mean, and the market's just spending time in the middle of the range trying to basically base. A big long would be 682. That would be a captain setup long, and the market can continue its upward momentum. If we fail below Globex is 529 and a half. That happens, then we're gonna get a bleed off into this gap, and then the that low of 445 from yesterday can be tested. There is weakness in the market, and there's one also another thing that worth mentioning is here. So we have the opening range. We broke under that, and market put a captain setup switch trade. That signal typically will run up to 600, and you're getting a fade of it. So if we break 73, we're going to 600 to retest based on that formation. So you got a little bit of a basing for the longs and a coiling behavior. And it seems like the market wants to run the stops. I'd rather be short than long till proven otherwise. Where would I stop from thinking like that if we break anything over the 580? Then that would put me in a pause from trying to go short. And the fact that the market has a captain setup switch trade, that also puts me, a little bit apprehensive about going short, because they're about to blow this. Here we go. I mean, literally, we're talking about it. It's happening. It's just. Yeah, so the market is disjointed here. You have a captain set up long on the 100. That can get you to that 600 from this type of behavior, and fairly quickly too, by the way. So just be a little bit careful about going short. I'm not gonna go long, but I definitely, holding off on trying to get short right here. Now you get to 600, you break the 605 to the 615, that range right there, that's harmony zone number 2. So if they get there and they give me a low, a high and a lower high, okay, we'll play the game. Where would I get a little bit more aggressive short? We have to break the 545, or we have to go to the 605 and 616. I mean, this is a pivotal point right here. A break above 80 is going to be very problematic for the shorts because that'll put the market in a six-prong captain setup long. That's a huge signal long. And if they literally have to defend 70 to 80 with their life, that's what the shorts have to do. Now that's a six-prong captain setup long. I mean, here we go. Look at that. I mean, that is huge. When was the last time we saw that? Ever. Especially on those big charts. I mean, you usually get a four-prong captain setup and the market reacts. This is a six. So now that gives the market a bit of a bias to the long side. Beast mode. Let's go, huh? Well, beast mode would look like an entry at 80, 70, 60, 50, and a stop under 40. And a run up toward, man, I'm telling you, 630, then you got 650 target. Then you have higher prices because you're getting another captain set up at 631. I mean, I have to take some risk if that I'm gonna do that. That means I'm gonna have to sit through the reaction around harmony zone number 2, which is resistance. Like if it pulls back, I'll give it a shot. But I'm not gonna go, like too heavy. Harmony zone number 2, which is resistance. Okay, so that's resistance, right? Damn. Boom. That's the move. Resistance right there, harmony zone number 2. So that's it's a two-sided market, and it's favoring that harmony zone number 2. So the longs are not in control, even with this structure that we saw. Captain setup, six prong captain setup. They had a pivot at 608, and they just literally smacked that price down. Is harmony trading? That's just one area of interest that triggers a high probability event, which is the harmony zone number 2 trade. But that's not the only thing that we do. Trading the zones are just one element of it. Your candles move fast. They're Rinko candles. They're not time based, so they're Ninja Rinko. So as the price moves, it prints out according to the parameters. 2010, we have 200 and 100. So some of them are faster than others, but it's not time based. It's motion based. So the market is out of sync again. And what is the market doing here? I mean, you have the captain set up, you have a higher low, and the market put on a close. So what does that mean? That means they're most likely going to retest harmony zone number 2 again. And that can, if we don't, if we blow right through that 610, then we're going to get up to 629, then we're going to blow the top off that market and run to 650. There's no equivalent to it. There's no equivalent to it, because you're not measuring time, so there's no equivalent to motion versus time. So if you go, for example, 12.6, which is this chart, 12.6, that's a fast one. It mimics a 1 minute in a way, but really a 1 minute, the market in a minute can go from 610 to 550, like literally. So a 1 minute chart will not give you the information you need to understand that the market has topped off and turned. But a Renko chart or a Ninja Renko chart will give you that information. So as far as speed of a 1 minute, the lower Renko bar charts get close, but they're not equivalent. It's apples and oranges, not the same. If you're trading futures, you really need information based on movement and not time. All right. We're about to get a captain set up short on the 7. Yeah, get some Apex. You could have as many of those as you need. You have pre-marked your entry and take profit. Does that mean that it's where you... Okay. Oh. Entries and targets, they guide you into the structure of the market, and based on these zones, I look for entries and targets, correct? So target 1, target 2, target 3, all the way to target number 6. Then typically when the market is in between entry and target number 1 and gives me a signal, I get in there and I'll look for target 1, 2, 3, and higher. So if we break 73, and we got so close. That's a big deal right here. That's a big deal. Now they're slicing right through. $629.5. If we break, which looks like we are, 629.5, that will give the market a big time bias to the long side. Yep. Pullbacks are viable on a swing trade basis with a target of 654.5. You have a captain, 6-prong captain setup that got tested right here. So now the low and glowbacks are big time support. And we have a captain set up long on the 200 NT Renko with that same low, and we have a target of 654.5. Then we have a target in 700 and target 750. Where do I reevaluate that idea? Any break under 569, let's call it 570. That will put you in a position to reevaluate. But this is super long, and I can get aggressive with this too. How many trades do I take in a day? Depends really on what kind of day we're having. Active days, I'm more active. Slow days, I'm more, less trading. Typically, I try to get under 10 trades a day. I've had as much as 50, and I've had as much as nothing. No trades, but majority of the time is under 10. Really focusing on harmony zone number 2 is important for a swing trade perspective. Scalping, you're getting a lot of scalping within the harmony wave. So we're getting a bit of distribution here. So most likely we're going to test harmony zone number 1, which is the 605 to 95. Hey Sheila, how are you? Good morning, good morning. So let's take a look at ES as well. So ES came very close to Globex and reversed with the one candle. Bullish behavior. I mean, what do I do here? I have to get super aggressive in order for me to trade in a trade like this, which is not necessarily something I wanna. I mean, like right here. Like here we go. This. I can take this trade and look for higher prices if we get filled. And I have to have a wide stop for it. Okay, that's one of them. Target 56 and higher, actually. That's a second contract. I want to get to 40 and let them run the stops above 40, and I'll take one off. I took one off to help pay for the trade. Left with one contract. We should get to 56 easy. Well, I don't want to say easy. Let's not jinx this damn thing. Here comes that target. We're coming very close to it. So the market is just gonna, I'm gonna take it here. So that's from 22 to 42, 20 points is 400 plus about 400, 500 bucks on that trade. I'm looking for a pullback to rebuy into it. We should get to that break line of 654, but typically when the market pauses right in and around that big target, it gets faded. So I'll just wait for a pullback. I mean, if it wants to run here, good for it, but What we're noticing also, speed, range, and behavior. Speed is slow. So if the market speed is slow here, it favors the longs because it will grind the shorts who need volatility higher and use them as for stop runs. Market is in sync on the long side. Pullbacks are buyable on a swing trade basis. We have the 654 as a target, and we have target number 4, 678, target number 5, 714, target number 6 is 768. We'll reevaluate that idea if we break 600. There's a bit of a distribution here going on. I get it, but here we go. Boom. Let's go. Next target, 679. Obviously, I'm not in it anymore. Probably should have just left one runner and just left it alone. But I gotta pocket some profits here. Is the system rule based? Yes, it is. System is rule based. How strict is it? As strict as you want to make it. For example, a captain setup. This is a captain setup, for example. Okay, I mean that's a big time frame, but when you get it, not time frame, wrinkle bar value. So on a lower wrinkle bar value, the same concept apply. Entry is one tick above the conclusion of the fourth candle. Stop is at the bottom end of that formation. Target is multiples of that risk, and also at the harmony targets as well. So literally you could put that on and walk away and have the ATM manage the trade for you. 688. Yeah, we're gonna get to 714 if this behavior continues. So Wayne, oh, these bars are set. Each bar value is a set value. So you always could count on it and you will know where this next candle is going to close. And that's very important information because I could put my targeting based on how many candles the market's going to run up in that direction. You're not waiting for time to elapse, and time is irrelevant when it comes to motion. Motion has its own energy profile. Okay, so if there's energy in the system, the market then it doesn't matter if you try to frame it in 1 minute or 5 minutes. The market is just going to rip. Okay, and if your system is based on 1 minute or 5 minutes has to elapse before you're triggered, you're missing so much information the market is giving you. While this is very, very sensitive to motion, like literally if energy is coming to the system, the candle is going to close. So right here, for example, it was one of the reasons I got into this trade, is you got a signal. That signal is a railroad. And it happened very quickly. I get in. That's it. I'm not waiting for 1 minute or 5 minutes. So because if I waited, look what happens. from 9:40 to 45, 5 minutes, I'm already made money and out. While somebody that has a system that's based on time is waiting for this to happen before he triggers an entry. World of difference. What is this? Who's this? Here you go. Who's this? Becca. Thank you, Becca. Appreciate you sharing that with us. Let's see here. And please, everybody, when you read the top part of it, make sure that you adhere to that top and keep it confidential. Does it move fast? It's not. I mean, you're taking your risk. I mean, how do you know if it's going to continue? I mean, it's trading. So you take your risk off an entry. Your stop is under that level of 619, and you're looking for a continuation. If the continuation doesn't happen, you're going to get stopped out very quickly, and you move on to the next trade. So that's the signal. The second signal is a switch trade. So that's a railroad, and that's a switch trade. So signal and the signal, both signals came in, and I got in both of them. Then I took, when the market paused here, I took a profit, and when I got to 20 points, which is my target, I took a profit. The actual course covers theory and application, including one-on-one training, in which we will go together and go through every scenario that the market is you're gonna encounter in the market, at least the main ones. And so this way you have practical knowledge on how to apply yourself versus just theory in a course. It doesn't work that way. So it includes the software, the course, and private training. It's ongoing. It never stops. You'll have private sessions weekly, and till you feel like you're done. And even then, from time to time, we'll connect and go over things that you feel like you need to brush up on. So the idea of having to go just give somebody a course and let them go figure it out on their own doesn't work. It just never works. So you have to have hands-on all the time. All right, so what we got going on here? The market is getting faded. The market is out of sync right now. There are the whole system is based on logic. These zones are based on a very specific logic that includes volume and price behavior. The signals have statistical probability to them of 76%. Switch trade and trigger trade, captain setups a little bit higher. It gets closer to 80%. So there's nothing. I mean, I'm gonna trade this for a living. It has to have a logic and an edge. Okay, so if we test the bottom end of that range with, yeah, so let them test it. If they flip this candle back up to 15, which they didn't, well, here we go. All right, I'm gonna take a shot at it here, and I have a stop right under that level, and I'm looking for a run up into the 20. Thank you. That's 12-point target. Moving on to the next trade. So that's the neutral zone trading. The market is just basically ping-ponging between harmony zone number 1 and 2. I should be looking for a bigger target to above 30 and 40 and a 60-point target. but there's a lack of momentum here. So I'm just taking the scalp version of this trade. It's at the top of the hour. Here we go again. Here we go. It looks like they're gonna blow the top off everybody here above 40 and speed up the buying interest. So just watch out for that behavior. The stop really is that 600. As long as 600 holds, I'm looking for pullbacks to buy into this market with a big target of 679 and a half. I mean, in that email, what are they requesting you to do, though? I mean, you have to click on the link. Yeah. You have to click on that link and see what they do. Okay, well, here we go. Congratulations, Becca. 5 payouts. That's 10 grand right there. Good for you. Congratulations. Let's go. Becca is the superstar for the day. So when we're seeing this market just bouncing back and forth, we have to break that 30. I mean, I get it. Like we cannot be spending that much time just doing this. Like the market has to really take off above 30. And we had the first touch, second touch, this is a third touch. You know, it has to resolve itself above 600 or above 630 in order for momentum continue, or the structure will collapse under 600. So we need to see that happen soon. So Albert, I'm understanding your questions a little bit deeper. Is there logic to it? What's the main principle, basically? The main principle is um, a core principle is when does motion happen in the market on a persistent way? How does the market look like, right? You'll find out the following, that when you have a chart that is like a big chart, like the 200, 100, that's one of the big charts. When that is, the prior close is long, and then you marry that up with a smaller chart like the 150, the prior candle is long. When those two things are happening, the market is in a state, and that state is called in harmony. And that state, where you find there's no momentum that happens in the market, period, that doesn't have those two charts aligned, period. So if I'm looking for momentum, I need that condition to satisfy itself before I go into looking for trades. That's the main idea. Now, there's a little bit of exceptions. One of them is right here. However, if you're looking for pure momentum with high probability of continuation, that is the state, a core state in understanding market behavior. Then you build on that structure, you build on that signals, you build on that money management, so on and so forth. So, and once we start working together, we'll work on a deeper understanding of that. All right, so what is the market doing here? The market is in sync on the long side, and we're looking for a target of 679.5. It's 10 o'clock. I'm gonna take a 5-minute break. I'll be back. when the market stops or the momentum is out of it, usually what you'll see is the market is out of sync. So the 200 and the 100 charts are out of sync, and the market typically will oscillate between harmony zone number 1 and 2, and that gives you opportunities to fade in the direction of the 200. So meaning if the market is long and you get into harmony zone number 2 and the market is out of sync, you fade that and you buy into a run up, and you could scalp that and wait for the market to get back in sync for a bigger move. But that's how we approach consolidated markets. First, you have to recognize that the market is consolidated, and visually, how you do that is when those two charts are out of sync and the price is between those two zones. That is definition of consolidation. Then once we define it, then we have an what do you use? Fading approach is the most successful one. All right, so yes, absolutely. So my personal account, I take more of a swing trade approach to them, and I have bigger targets. Prop account, like I have 20 Apex accounts here. I am more of a scalper in the direction of the trend with 20-point targets for that type of approach. Because if you're looking for 100 points and the market reverses 50 in the direction of that move to 100 points in your target, well, that blew you out of your Apex accounts or any prop accounts that you have if they have a trailing threshold. So if you're trading prop firms, you scalp more. If you're trading your personal account, that gives you the opportunity to average in and look for bigger targets like this. I'm running right now in my personal account multiple positions long, and I have a target of 740. But for my Apex, I'm gonna have to scalp this along the way. So here we go. Target is 679, and then target of 709. So what is the market doing here? Let's take a bigger look. So the opening range and the market runs up into the bottom end of it and breaks, test, break, test, break. And then we had that captain setup switch trade fade right here. And the market tested it multiple times before it ran back up, and we're running back up to the opening range. So really, on a daily basis, the market has done nothing but break and come back to retest. So as long as we continue to trade under the mins, the mids of the opening range, and we have two of them, meaning this zone right here. Okay. So as long as we continue to trade like under that, then there's a chance that the market can reverse back in. We could come up to that zone and come back in and retest, that's fine. but that area is a must for the longs to break. And most likely we're going to come up to it and experience turbulence. So the bottom end of the opening range is 677. So we're probably going to experience a little bit of resistance here and a pullback in the next few minutes. And then if we happen to break above it, then we have this big zone, and most likely the market is going to react to that as well. So we're starting to come into areas where the market is going to struggle a little bit. I'm looking for these pullbacks, which we're talking about it and it's happening. The pullbacks as a buying opportunity, because the structure of the market is long. I'm aware of those two areas where if I'm a buyer, I need to be selling into that zone. Wayne, I'm sending you a message. Target is hit. Next target is 704. Pullbacks are viable on a swing trade basis. I know these railroads have been great. Switch trade. Okay. So what we got going on here? I mean, it's just a slow market, and it's inching its way to higher targets. I mean, that's the bottom line. Wayne, one of the big signals that you want to pay attention to is that captain setup on the big charts, like a 210, 200, 100. I'll show you just a few examples here of them working. Obviously today, this one is a big one. I don't know if you're listening or around before I start talking, but I mean, that applies to everybody, even if Wayne is not around. Okay, perfect. So captain setup. So it's a four candle formation, a minimum of 4 candle formation. The market confirms it, runs. That's just one. This is one that failed, and then the second one worked out for a big amount of money. Okay, so that's one, and the second one right here. So you're seeing, and when they fail, that's actually triggers a counter move that you could take advantage of. The market came in here and gave you a captain setup, and then on a swing trade basis, that was a huge move. The close on the 16th created a captain setup, short. This is a good one too. Captain setup switch trade, which is actually one of the big signals. If you ever see one of those, that is, you know, it moved about a candle and a half, came and retest, and boom, and the market really haven't looked back since then, right? Okay, so that's a massive signal on a swing trade basis. So when we see that on the 200, 100, that colors our perception of the market going forward till that signal is violated. And here we go, another one, which is captain setup short up there. And then look what happened, market tested and boom. And you could go as far as you want to. Weeks, months, years. You will see this to be a very significant event. And it doesn't happen as often, but when we're having a lot of them lately, that it's a pivot point, a big pivot point in market behavior, and it gives you a structure that you could feel confident taking on positions and big positions in the direction of that captain setup. So first thing that you learn here is this, and when it fails, how do you handle it? It has a high probability of success. How do you take advantage of it, and on a swing trade basis and a scalping basis? So you could customize that idea to what you're trying to accomplish. Are you trading your personal account versus funded accounts, or both? You treat it differently. So the next target to this rotation is 704. inching. We're inching toward it. We're inching. All right, just checking on everybody. How's everybody doing? Where are we at? Adam. Becca, where are we at, Becca? Sheila, safe. Wayne, any trades? Excellent, excellent. Good job, safe. All right. Becca up a K on 6 PAs total. Here we go, Adam. Let's go, baby. You got this. Yeah, evals don't count. Well, they have a they have a plaque with your name on it over there. You paid a couple of Lamborghinis at least. But you know what? It's part of the game, man, and that's what it's a process of improvement, a daily improvement. And you have improved significantly, my brother.